Welcome to the Financial Thought Exchange podcast, where you learn from the brightest minds in the investment industry. We are here from talking to you from the CFA Institute annual conference, and with me now is Jason Pereira. Welcome.
Thank you.
So a short introduction of you. Jason is a well-known financial planner and industry advocate from and based in Canada, right? He's recognized as one of the leading financial advisor industry thought leaders. If you just Google his name, look up YouTube, you'll find numerous conversations and talks by him, and he's a great speaker. And he speaks on various financial advisory technology-related topics. He's also the host of the Fintech Impact Podcast, and he's an advisor to technology and AI startups. So I love podcasts, and yours is a great one.
Oh, thank you.
So welcome, and you just came from a session. This was about Robo-Advisory. Now, we now are living in a world where AI is on everybody's mind. And I bet that a lot of people conflate the two by now. A lot of people have heard about Robo-Advisory, kind of wonder what it is. What does it actually mean to have a Robo-Advisory now when anybody has a ChatGPT in their pocket, right, where they can ask, well, what should be my allocation today?
So, I think every conference now is obligated to say AI is part of the session and the hype cycle we're in right now. But at its core, let's go back to the Robo-Advisor business. Robo-Advisor business is something that basically came in and kind of bridged the gap between fully advised and between do-it-yourself. It was the ability, at least in the first version, to fill out some questionnaires to understand who you were as an investor, and then you slide it into one of a number of portfolios that match your risk tolerance. And yes, it also came with very slick onboarding, very slick reporting, and a really, really crisp, consumer-focused, easy-to-use implementation for technology, right? And it really showed the industry how broken our experiences were in requiring all this paperwork and hours to get it ready and days to open up accounts and fund them. This, you could download an app and you get onboarded in 5 minutes. So that's where it started. Now they've evolved ever since. They've added other investment services, other vehicles and whatnot, but they've also gotten light versions of advice and even some light versions of planning. Now, where AI comes in, of course, is this is the new shiny object in the technology world, right? And yes, we can ask it and actually get advice, like actual natural language advice from it. And yes, you can ask it about your investing and how to handle your investments. You can get a pretty reasonable answer, but it won't execute for you. Whereas the services were largely around execution. So there's a great opportunity for these two to come together, or at least for robos to leverage AI technologies to provide further extensions to the service.
So a Robo-Advisory, that might not be clear to everybody, that it is actually a way to get all the way to execution. It's not only just to get a sense of where you should be going, and then the human has to take over in the end and do the...
Right, I think the reality is that Robo-Advisory as a term was actually a long term. It wasn't really advice. It was some cursory advice, but really it was about robo-investing. Right. It was all about how do I set up an investment account in a portfolio that is roughly what I should be in, right? And that's the question that was answered by Robo-Advisory in the first place. And of course, they've expanded into other profit lines and other centers of interest and other areas of the industry. But in general, it's really, really investment execution focused.
And what do you see the trends are now in terms of implementing or exploiting using AI somehow in the Robo-Advisory world?
Yeah, so look, we got to remember that AI is just a tool, right? It is the bright shiny object of the day that everybody thinks is the revolutionary thing, and it is. It's very, it's a pre and post AI world. That's that kind of big technology. But when we look at what AI is good for versus what it's not as good as a human being for, or maybe the human being with AI is the best possible solution, and what Robo-Advisors do, you start to see the obvious things that are going to make sense. So, look, is a Robo-Advisor going to open up an account faster because of AI? No, like they're already within minutes. Is a Robo-Advisor going to basically be able to, are the people behind it going to be able to code faster and better? Yeah, they can do that, so they can come up with new code to maybe enhance the experience. Great. Are they going to have better chatbots to service the client? Yeah, because most chatbots pre-AI just are terrible, right? So are they going to basically be able to refine the portfolios based on more inputs and understand the client better? Yeah, probably. But are they necessarily going to replace the financial advisor? No, right? Like in general, remember the value proposition of the Robo-Advisor is one that's very unhuman. It's one that doesn't involve someone getting to know you on a personal level, understanding your needs, your wants, your canvas, and everything else like that. So on the other end of the spectrum,
you can get a really highly customized experience in many capacities that was specifically to like an individual. But will it make robos better? Yes. But will it make the entire industry better? Absolutely it can if harnessed correctly.
So a robo-advisory, traditionally and probably still now, in terms of how we define it, right, is I don't need your kind of personal support and all of that. Like I know kind of where I'm going already. So help me the implementation to figure out exactly the model.
Yes and no, right? Because like it's basically we'll make a recommendation as to what portfolio you should be on based off the risk tolerance questionnaire and everything else. So it does give you some guidance and it does implement for you, right? That's the key. It simply says, tell us who you are, here's what you should be doing, agree or disagree, move the needle, now we'll implement that. Right? So that's traditionally the core model there, right? So, but it doesn't know you as well as another human being through it. It doesn't basically get some people. It's only so many limited sets of questions it will ask.
Right. And right now, how Robo-Advisor, or how it has been implemented, at least thus far, let's say, before AI being widespread, has that been, how much hands-on has it been with the people, like would it be a person overseeing hundreds of clients with the use of a robo-advisor and ultimately always checking kind of that, the robo-advisor is not running amok, doing something weird, or how much like human involvement is there in the background?
For that, the robo-advisory rule came into the highly regulated world that was our industry already, right? This kind of created a slightly different rule set. So do these robo-advisory companies have their own CIOs and portfolio management groups who design the portfolios that people go into? Absolutely. Do they have support staff? Yes, they do. Do they have advisors on staff? Yeah, they do. But those advisors aren't looking after 50 or 100 houses. So looking after 500, 1,000 houses, right? And on an on-demand basis typically, not on a necessarily scheduled review, or maybe nothing more than a simple scheduled review to make sure that they're meeting KYC requirement. But they're really just another way. Basically, the way to look at it is they're the most accessible way of getting a well-designed portfolio for the average person who may not have the money that it takes to get personalized, customized attention. That doesn't mean that they can't manage money for people with millions and millions of dollars. Yes, they can, but those people have more options for more customized service.
Are people mostly served right now by robo-advisory that we found in these? I know there are a lot of larger institutions that have them, like they have that as one of the capabilities, but then there are also these smaller startups that do only that and are like smaller, some not so small anymore, but where is the universe there, like dividing? Where are the more clients right now?
So it's interesting. So yes, people think of the small startups and the wealth fronts and the betterments of you start natively. But then the entire industry did adopt the model, right? And there were two really different silos. There was the traditional mainline businesses like the JP Morgans of the world who adopted Robo and then shelved it because they weren't getting anywhere. Mainly because of the channel conflicts or because it wasn't quite hitting the same note. Like, look, there's lots of reasons we can get into it. So a lot of those traditional mainline businesses got rid of it. The ones who kept it were the ones who had direct-to-consumer businesses already. The Vanguards and the Schwabs of the world, we have very large robo-advisors. Now, when you think about how that was a net improvement for the experience, because before, if you went to Vanguard, if you went to Schwab, you were a DIYer, right? You had to basically design your own portfolio or read their stuff and do their suggestions, right? Now, if you're going there and you don't know what you're doing, or even you ask somebody to be, it doesn't matter, you have an option now, option B. Option B is, hey, you don't have to figure this out yourself. Me can give you the guidance on how to do this. And those are the ones that continue to succeed in this space, despite the fact that they were already incumbents before. But yes, traditional mainline failed pretty badly at it. I mean, they don't really care. They're large enough and they're growing, but that's fine. But as an alternative to some of the other like DIY options, they did incredibly well.
It's interesting that you mentioned JP Morgan because living here, I know that they were really, I know that people who were really into like starting that and that's the story I've heard, that they didn't really catch on, but I didn't know that it's because very much what they were doing in the past and how they fit it in.
Simply because, I'll give you experiences in my own country in Canada, like with the largest RBC, the largest bank got into it and shelved it. But when you look at the model they came out with, they were competing with a firm that allowed you to come in with $1 minimum and charge no account fees or transaction costs, all in an AUM, like a very small, like 40 basis point fee. You compare that to the RBC take, which was, well, we're going to charge you the account fees we normally do and trading costs beyond that. So like they weren't willing to disrupt their old business line and value and revenue lines to start something new because they're not expected to do that. Large institutions have a hard task. They have to continue to get their quarterly targets, to hit their dividends, and by a reasonable amount. They're not incentivized to not make money like a venture cap startup is, right? So those are two very different worlds, and it's not surprising one struggled to adopt that kind of model and disrupt their own thinking, whereas the other one didn't have that inwards, and therefore they were able to move forward.
And now AI enters as this big revolution. From what you're saying now, does that imply that we're going to see most of the AI being implemented in wealth management and asset management as well, in smaller startup shops, newer operations, as opposed to those old ones?
Be everywhere. Like, you're dealing with the post-AI world, just like before we were dealing with the post-mobile computer world. Before that, we were dealing with the post-internet world. Like, these are one of these revolutionary technological changes that come along every decade or so that changes the way things were before, right? Now, how do they change? They change, but they still have similar existences to the precursors that existed before that, right? So how's it going to change everything? Look, it's not just the robos that are going to use this. It's not just the discount brokers. It's going to be everyday advisors. When you look at the amount of time it takes for an advisor like myself to service a client, it's enormous, right? The amount of time that goes into a meeting prep, to basically to documentation and compliance, that goes into producing a financial plan, which is benchmarked as something like 10 hours from start to finish. When you start looking at AI's capabilities to reduce the amount of time that goes into the heavy lifting of the business, it's immense. Right? So you look at an RIA today compared to 15 years ago, and 15 years ago, that RIA probably had double the admin staff it does today. You fast forward 10 years in the AI world, is it possible that I'm working with half the admin staff I do now per dollar invested? Quite possible. It's going to take some time to get there, but yes, this is the efficiencies we're able to garner. So the reality is that I think we're on the same trajectory, which is effectively that advisors are going to basically be more efficient, and we're going to either service more clients, or we're going to service those same clients be more deeply and expand our value proposition. That's largely what we've been seeing for the last 20, 30 years in this industry.
And how you're explaining now and describing how AI is being implemented, preparation, all that, is that how you would foresee going forward also, that it's implemented in terms of once it comes to the human interaction, that's where it's all human, like that's where the human steps in, as opposed to having AI bots, things like that?
Well, look, every AI test that's ever happened before, whether if you're playing chess or Go or other things, I've found the same thing, that an AI will beat a human being on its own on a very repetitive task, but an AI plus a human being actually beats the AI. There is something the human brings to the equation. There is something that we bring to an interpersonal relationship or an interpersonal reaction that I can understand and be empathetic to a human being in a very real way that technology can never be. So the reality is that will it enable me to get further away from the heavy lifting of everything we're doing? Yes, it will. Will it allow me to get closer to the human being and the best purpose of helping them live their best purpose in their best life? Absolutely it will, if I can see the efficiencies that. Will that also at the same time for lines of business that aren't client-facing, like DIYers or robos, will that enable them to basically potentially do more or lower margins? Yeah, it will. So there's a lot of ways it can be applied, but the reality is, I can tell you right now, 10 years down the road, AI is touching every aspect of something you do, and it's just another part of your life, and it stops being magical.
You mentioned, since you're in Canada, curious, how would you compare US and Canada? Is Canada in the forefront in any of these areas, or should we be looking for Canada at all?
I prefer to come in US conferences, traveling forward in time 20 years. Go back. No, I can get into it, but we are a very oligopolistic country, very little competition, and that lack of competition, unfortunately, fosters low standards among the So when I come down here and I see the incredible work being done by a lot of, especially the independent market, and I see the options and value propositions being put forward, it's inspiring, and I always tell people in my country that you want to be a better advisor, learn from a country that's figured out the business model better than anyone else has. That's America.
And that's true across the board. There's no little niche there that we can look for Canada's for.
I mean, look, the UK's I think the UK has probably got the right regulatory balance, although I'm sure people here would disagree with me. But in terms of actually having the right understanding of the business and having enough competition to create like value propositions that are differentiated and support people, like absolutely, you guys are the world leaders down here.
Yeah. So you came straight here from a panel, which was on this topic. So I know you're a experienced educator in this space. What would you hope that the audience took away from your remarks there, if they would take one thing away from it?
Well, given that I said I hope you take this one thing away from my panel,
I did.
It's an easy question to answer. So I basically said at one point, because someone was kind of talking about the entire industry leading from product to planning to client, I said, look, take the one thing away. I'm going to disagree with my colleagues to some degree.
we got it backwards. Okay? The problem is this industry started from an industry of selling access to markets and commodities, and not commodities specifically, but investing, which is commoditized, and selling products and services, right? And it's slowly moving towards the client. We have to flip the narrative, right? If basically look at the job of wealth management as to basically benefit and help the individual, that individual client and their family, the people they love, live the best, fullest version of their lives, and then work backwards from that. You find that, okay, you want to live like this. Financial planning is the way I'm going to basically set the course map for all that. All the investing, insurance, every other service we do is a means of executing on that plan. And then, once that's all executed on and everything falls through that, it's all about going right back to the beginning, understanding that human being and how their life is changing, what matters to them, and how you can adapt, and what else are their needs. And when you do that, you start from the best possible starting point. Because too often in this industry, everything is a solution to such a problem, right? Same problem AI's got going right now. Every panel I hear is talking about the impact of AI, even if it has nothing to do with AI, right? So let's stop searching for a solution to deal, for a problem to deal with a solution. Let's actually say, what is the problem statement? What is the thing we're trying to do? And if we do that, then it becomes very natural to say, here's the best tool to solve. And if we start with the human being and making their lives as good as it possibly can, then all the tools and all the plans and all the strategies will naturally flow from it.
I was thinking like what you describe in terms of thinking about taking all the goals and considerations. That's for many people sound like a huge luxury that they would not afford. And I wonder if AI also, and other things maybe, but one way to think about it as a tool is just cutting costs and doing what you do, but yeah. Here are a few basis points off here, and maybe more people can use this.
Bottleneck is the human being, it's the advisor, right? So look at how many hours I have in a day. AI is not going to change that. You look at how many relationships I can manage in my mind. That's not going to change because my hardware has not been updated. Human hardware has not been updated since we started climbing out of caves, right? And there's a concept out there called the Dunbar number that says you can't handle more than a certain number of relationships that you can be in your mind. And no one wants a relationship with an advisor where they say, let me put you on hold, John. Let me look who you are up in my CRM. And look at all our past history so I can come back and then actually have an informed conversation about what your life was. They want me to pick up the phone and know that their kid broke their arm at a baseball game last week, right? Or that they're planning on retiring in 6 months, whatever else it is, right? So the reality is I cannot expand the number of people, my idea, beyond a certain threshold, right? Either be cognitive or there be a number constraint. So there's only so many people who can advise per head. But here's the thing. What you said about efficiency is absolutely true. So if I can reduce the cost of what it takes to service an individual, then it makes individuals who had less wealth more accessible to proper business minds. So yes, the real efficiency play with AI when it comes to servicing people is allowing for the advised model to actually move down market more and more, which is a trend you've been seeing with technology for a very long time.
What you're saying, I'm thinking about it as the two constraints that you're hitting on. One is the time constraint, and that is something that technology can do for us so that you can use more or less all your time. Of course, you should know what happens in the markets and all that, but a lot of your time, more and more of your time, actually talking to your clients. Now, even if you max out your time with talking to your clients, I think you're saying you can't really do that because our monkey brains have that limit, right? So does that suggest that a financial planner in the future should be something that you always do part-time? Like you might be a plumber and then you're a financial planner because the cognitive part is the limit anyway?
I think the reality is like that's the human beings are still going to take up that time. Like I have a cadence with my clients where I meet them once a quarter. Right? That's enough to keep me busy full time. Yeah. The stuff that comes through that. Now, especially if you're an advisor. Now, here's the thing: a traditional advisor rarely handles investments, okay? And maybe they handle plan. Yeah, can you handle more in a day? Not cognitively. Can you handle more of that time constraint? Yes, you can. But what you see is, of course, with the continued evolution of the industry, is more holistic planning. More and more, how do we provide more services? How do we provide more advice around different life events? How do I be there in a time of need? That's the continued trend you're going to see. Is in order to maintain the margins that advisors have been, or their fees that advisors have been able to benefit from for years, what they've done is they've fought margin compression through value expansion, right? So that's not going to change, right? Now the thing is that as everything becomes closer and closer to a button push, right? The final frontier is that of behavioral finance. It's understanding not just how to advise the client, but it's understanding their personal financial traumas. You say, and being able to say, well, wait a second, I understand you're not following this advice. What's actually the root of that? Understanding what's preventing them from succeeding, right? Understanding that you have to modify your advice around the individual because who they are and what they've been through and what makes them up as a human being. And not simply saying, oh, they're not taking my advice. It's okay, well, this isn't working for you. Let's work together to find something that does. Because no plan works unless the Venn diagram of mathematically optimal and behaviorally optimal overlaps. If there's no overlap, it's not going to work.
So the interesting development in psychology now is that they're implementing AIs as just instead of humans completely. And in that field and others too, service often find that people trust the AI more than a human. But you would not believe that they can replace humans completely.
I think for some people it will, right? I think some people will be fully comfortable with just not being involved with AI.
Because they have a perfect memory of 5 years ago your son broke his arm and all that.
It's like, let's go back to psychology, right? We have a crisis of depression in this world, right? And that has largely been brought along in a digital age. So as we become more disconnected from each other, depression rates have been increased, addiction rates have been increased. So do we think that the solution is to basically separate humanity from each other in financial services and basically just turn to a robot for someone who, at the end of the, someone said, you know what a robo-advisor is not going to do? I just said, you know what a robo-advisor is not going to do? It's not going to sit with the widow after her husband dies and reassure that everything's fine because of all the planning you've done, but not to worry about that right now. Worry about burying your loved one. I'm going to be there. We're going to meet a couple weeks later. We'll take care of everything and make sure that they're going to be okay. It's not going to be there when your kid gets sick. It's not going to be there when the good things happen. You send a college sweater to the entire family because their kid just got into the university they tried to get into. It's not going to be there when the client calls up and says, I can't deal with my boss anymore. They're eating my soul away. I want to go do something that makes half as much money, but I'm afraid what's going to do to my family. You can reassure them that based on everything they've done to date, they can go do that, right? That type of human element. You know what? Good luck replacing that with a chat.
Although you mentioned also, to some people maybe, but very small slice of the, for sure.
First in this world that we find this fight.
There's Spock's out there, that are fine with any kind of interaction.
There will be people who do that. Now, if they're happy doing that, more power to them. But that's not the trend we're seeing.
Yeah, no, interesting. So what is, generally, if you would give an overview of kind of what AI, if we think about AI versus robo-advisory, and people are going to conflate, a lot of people are going to conflate them. Some people are going to forget one in benefit of the other. My guess, but you'll know better, is that the robo-advisory word that I feel like is already fallen down a lot is probably going to fall down more because people are just going to think about it as this AI thing,
I'm sure
or maybe it will be boosting it.
At some point, that's going to happen.
Look, and not call it.
Is a distribution channel for services.
Yeah.
That's it, right? It is I don't need the full-blown, full-service model.
Yeah.
I don't need to meet with anyone. I don't even need a watered-down full-service model. But I want something more than doing it myself. I need some direction. Right? That's what a robo-advisor does. Fits right in the middle. And they will have, some of them will have light planning services, some will be pure investment. They will all come with their own value proposition. But really, it's all about how do I give you some cursory advice and onboard you into a solution as fast as humanly possible. AI is nothing but a tool, right? It is a piece of technology that we're going to apply when it makes sense. And in a couple of years, when the hype cycle dies down, we're going to stop talking about it in every last one of these things. We don't talk about what coding language they use to build stuff, right? Blockchain has finally disappeared from the conversation of every conference after years of being the next thing, right? End of the day, all technology is a tool to get a job. And what's going to happen is, yes, AI, the robo-advisors will use AI to get a job done. Advisors will use a job to get a job, the tool to get a job done. Do-it-yourselfers will do the same thing. And you know what? People will continue to self-select into whatever distribution channel that they feel is the value proposition that fits them.
That's a great conclusion to end on. Thank you so much for coming over and having this conversation. And thank you all for tuning in to the Financial Thought Exchange podcast.
For more information, please visit rpc.cfainstitute.org/research-foundation.